Everyone wants to get funded, but most traders are walking around with straight up false beliefs. They hear things like, you need to pass in 3 days, or prop firms are a scam, and they just run with it. But those myths are the reason why most traders never get consistent, even when they're talented. And this video is going to change that. I'm going to be exposing the biggest 5 lies traders say about prop firms. And I'm also going to be giving you the real playbook that funded traders follow. No theory, no fluff, just clarity. So you can finally stop sabotaging your own challenge. If this is already making sense, feel free to drop a like or even subscribe. And if you want weekly breakdowns, the juice letter is linked below. It's free, just click on the link and it's yours. Now, let's talk about the 5 common myths for prop firms. The first one, which annoys me the most, is that you need to pass fast. No, you don't need to pass fast. It's very, very wrong, because most people fail simply by rushing the process, and trading is very much a very slow rhythm up until it skyrockets. But to get to that point, you have to build these small, consistent wins in increments. So if you're a person that was failing because you were rushing the process, that is something you need to take into consideration. At the end of the day, if you treat it like a race instead of a 30-day evaluation, it's just not going to work out. You have a full month. Completely, you have a full month for you. Take it in a way where it's like that full month is for you to kind of regroup and reassess and collect your data and understand the way you trade. Maybe you like to trade in New York, maybe you like to trade in London, maybe you don't like trading both, you know? Stop moving from one strategy to the other, just trying to pass really fast that one challenge and turn it into a gambling thing, because it really isn't. You have to become really consistent, and that's how you get paid in trading. Now, since you have a full month, right? And prop firms give you that time for a reason. They want the consistent traders. They want to classify you as a class A, not a class B. In order for you to make money for them, you have to be a class A trader, which is how you're never going to get denied a payout, which is how exactly they're going to be able to replicate your trades into the real market. And that plays a big role by you becoming a consistent trader instead of that one trader that's trying to gamble one account and get one lucky payout. Because down the line, you're going to lose a lot of accounts, and before you even know it, once you get that 10K payout, you've probably paid 10,000 to the prop firm. So it really isn't the way that you want to go about it, right? The best traders pace themselves. You have to know exactly how long it takes you to make a certain percentage. For me, for example, I'm confident by saying I can make 2% per week. Now, whether this may be on $1 million account, on a $10 million account, on a $1,000 account, it doesn't change. I risk 1% to make either 3% or 10%. Maybe one trade plays out per month where I get good with my pace. Now, if you want to think about it, you have to wait for your A+ setups, right? There is no A+ setup that's going to play it every single day. So you might as well wait for it instead of just gambling your money away to the markets every single day. If you can protect your capital, avoiding a loss is also a win in trading. So you have to treat the first few weeks like research, not profit hunting. Think about it, right? If you know exactly the way you trade, the sessions you like to trade, the models that you like to trade, and you never look away from that, you're never moving to another model, you're going to get confident at this, because these are the trades that you win from, and then there are the trades that you lose from. So 2 things you have to do. 1 is double down on what's working. 2, delete whatever is not working. Now, slow is smooth, smooth is funded, and that's what we want. We want to get this. We want to get funded, and that is the first myth. Now, we're going to move on to the second one. The second myth is you can't make real money with prop firms. I want you to think about this one, right? Because right now, 2025, you are in a space where it's very, very easy to get to a 10K month. But it's also very, very easy to get distracted. And social media plays a big role. I want you to forget about everything you've seen online for a second and just focus with me, right? You can't make real money with prop firms. Well, I've generated well over 6 figures last month. I can show you, and it's gonna pop out on the screen right now. $89,000 in payouts for the month of May. And that is because of a prop firm, right? You have the opportunity to not risk your own capital, but actually risk ones of the prop firm. And all you're gonna do is prove you're a good trader that is consistent and focus on having these incremental wins consistently, right? And people confuse payout limits with income limits. Now, 10K month is real, right? scale it properly and it adds up. Most people think small because they're used to risking their own $500. I get it, right? You deposit $500 into the market for a live account, and you try to flip this into $10,000, and then you deposit another and a third and a fourth and a fifth and a sixth. And by the time you're on your sixth 500 deposit, you've already wasted $3,000. But in reality, you could have paid $500 to get a 100,000 account, use that first month to only pass the account, and then moving on from after this, you can make 2% per week, which is $2,000 off of the $100,000 from the prop firm, which is also $8,000 by the end of the month, instead of kind of wasting your $3,000 trying to turn that $500 to $10,000. I hope that makes sense, because it should, right? Now, prop firms give you access to serious capital only if you're ready for it. The thing is, I get it. You're probably not used to having a 100,000 account, but I'm currently trading $2 million in funding. What I do is I have 1 million set aside and another million that I trade with. Hey, the outcome of trading is random, and you always better be safe than sorry, right? The goal is to limit the downside and forget about the upside, because it will take care of itself once you understand and control your own risk. Get used to it and think about trading as a percentage gain. If you can make $1,000 off of $10,000, then by default you can make $10,000 off $100,000. That is the second myth. Now we're gonna move on to the third one. I think the third one is very confusing, right? And I think this is the number one excuse people try to avoid. And people set excuses in a way where it's kind of an escape plan, right? But the hardest path is the easiest path. If you think about it, myth 3 says the rules are too strict. And they are too strict. But yes, and that's a good thing. Rules filter out the gamblers. If you're a gambler, the trading space doesn't even want you. The market is a mirror of you as a person, so by default, you're going to be the best version of yourself if you're a good trader. And that takes time. Think about it. You're transforming your own self into becoming the best version of you and making a lot of money with it, for sure. Now, they protect the firm and the trader. The reason why they have these kind of strict rules are for both ends. You as a trader and the company as them funding you. Think about it. They give you access to 100,000, but obviously they're not going to give you access to the whole $100,000. So they provide you with two things: daily drawdown and total drawdown. Now, if you think about it seriously and you only risk 1%, you technically can't breach your account unless you're a bad trader. So if every trade you risk 1%, and if you think about it, your daily drawdown, maybe the most strict firms have their daily drawdown at 3%. If you think about this, you're never going to breach it because you're never going to risk the whole 3%. It just simply doesn't make sense. You know you're going to breach the account if you risk the whole amount. Yet you do it anyway, and then you become hopeful. Let me tell you something. The moment you think that your trade is going to happen and you're hopeful because of it, you're doing the wrong thing. It's just never going to work. If you're a trader, you are a millionaire. It's just a matter of time. And you have to make sure you embrace the process. You have to be comfortable in uncomfortable situations. So the rules are strict for sure, yes. But if you can't stay within max daily drawdown or risk limits, you're not managing money. You're gambling. Learn to love the rules. Like I just said, you have to be comfortable in uncomfortable situations. They are what make the model sustainable. Because of this, we are now able to be funded with hundreds and hundreds of thousands of dollars because of prop firms. So use it to your advantage. Think about it as them being on your team. They're telling you, hey, we'll give you $100,000, but we don't want you to lose the whole amount, right? So we're gonna restrict you from a certain amount. And that certain amount, we want you to take it as if this is your whole money. But the only risk is the upfront fee that you pay. And that's it. Now we're gonna move on to the fourth myth, and I want you to focus on this one because I really like it. It has shaped my whole entire journey because I've understood what that means. Now, myth number 4 says that trading is too risky and the prop firms are too risky and the whole space is too risky, but everything in life is risky, right? And that is extremely false. It's false because the only money at risk is the challenge fee. Like I just said, you think you're down $6,000 or $7,000 if you're on a $200,000 account. But in reality, you're only down the upfront fee that you paid. So let's say the $200,000 account costs you $1,000. Well, then even if you're down $8,000, you can still get another $200,000 account for just $1,000. Think about it, right? Now that you know that the only money at risk is the challenge fee, that's it. If you lose your seat, not your savings. Instead of depositing your whole entire savings and hoping that eventually it will kind of work. Doing it through a prop firm is going to limit your risk. Having the strict rules, you're going to stop gambling and you're going to start focusing on getting that payout. Even them having the withdrawals set in place and everything, every cycle that you have in place, maybe they pay you out every 2 weeks. So this way you don't really have to take 5 trades today, because anyway you're not going to get paid today, so you're going to wait 2 weeks either way. So if today wasn't a good trading day, well then you go to the gym, you optimize your mind and your body, and you make sure you check on your loved ones, and you have the day for you, and that is what trading has unlocked for me. Freedom, time freedom, not just financial freedom, but time. You get to take 4, 5, maybe even 6 trades the whole month, and you make a lot of money, rather than going to work at 9, coming back at 5, and then saying, hey, I still have to do this for 40 years in order to get to my retirement and all that kind of stuff. Now, we're not going to go down that road. I just want you to focus on this myth, right? It might be too risky for some people because they're taking it as gambling. And yes, if you're gambling anything, then that is too risky. But if you have a system in place and you focus on capitalizing on that edge and only that edge, and you're able to be committed and disciplined and do it consistently, you're gonna get paid a lot. Now, that is the safest risk profile you will find in any market. Think about it. You pay $1,000 to get $200,000. Do you ever think about that? If you make 2%, like I just said in the beginning, but instead of $100,000, it's $200,000, that 2% is now $4,000 in the week, is now $16,000 in the month, and you're being completely safe, right? The only thing you have to do is pass the evaluation phase, which you already gave yourself a month to do so, and then do the same thing the next month. Now, passing the evaluation phase already means you're gonna make 9%. So make 9% the month after, and that's $18,000 the next month, which is, that's better than depositing another amount the next month and kind of going on and doing the same thing every single time and kind of being stuck in the same place. It just won't work. Plus, think about it. You can't keep doing the same thing yet expect a different result. It just won't work. Now, you can lose, reset, and try again without financial ruin. It's the perfect trading environment. Now, let's take it a step further, right? Maybe you don't like prop firms, but maybe sometimes some things come into your life for a certain period of time, serve their purpose, and then move on, right? That prop firm is that for you. If you don't like it, hey, use it to your advantage. Get these payouts, fuel a live account, and trade at your own freedom, the way you want to, without having to wait for a withdrawal period or whatever. But at least start somewhere, right? Do the change. Hey, maybe just risk that upfront fee maybe one time, and who knows? What if it turned out better than you can imagine? So now I'm going to be moving to myth number 5. The last one, and I think it's very, very, very important. Now, myth number 5 is that you need a perfect strategy, right? But there is no such thing as perfect, because the outcome of trading is random. For all we know, price can fluctuate on one day like crazy, and on the other day could be very steady. Now, having a strategy is for sure the perfect way to approach it. But again, there's no such thing as perfect. Perfection is the myth. You don't need a perfect strategy. You need a strategy that works on the long run. What you need is consistency, right? Think about it. If your strategy is 60% or even 50% working with a risk to reward of a 1 to 3, let's think about that. You take 4 trades, you lose 2 and you win 2. Remember what I spoke about risk? You risk 1% in order to either gain 3% or 10%. Let's be extremely safe and let's say 3%, because that is your risk reward, right? You lose 2 trades, so you're down 2%, and you win 2 trades, so you're up 6%. 6 minus 2, you're already up 4%, having a 50% win rate. So the strategy doesn't have to be perfect, it just has to work. Prop firms aren't looking for flashy traders at all, trust me. They want traders who follow a system. One pair, one strategy, one risk model. Do that for 30 days and you win. And by win, I mean make a lot of money. My last thing I want to say are these J tips that I have written for you. These 5 myths keep traders scared, stuck, and sloppy. You're probably thinking the same thing, and if one myth applies to you, then it's time we change this, right? But when you understand how prop firms actually work, you stop trading like a hobbyist and you start operating like a pro, which is what I want for you, right? And that's it. a very quick, straight to the point video. I really hope you like this one. If you do, actually tap the like and subscribe, because like I said, this is a new channel and everything I get from you guys shows me that you are either liking or not liking the value that I'm giving you. And as always, I will see you on the next one.